All right. So yeah, man, I'm excited. So just recapping, as I said, guys. So we're running up tonight's session. This is usually the session that we run every Wednesday, 9 p.m. for our students, the people that that usually learn from us and trade with us and stuff like that. But I said, you know what? In honor of us doing this little marathon here today, we're gonna go ahead. We're gonna open it up to everybody. So tonight we're gonna be going over something that I know a lot of people typically ask about. I get questions almost every single day. I see questions on YouTube about this. I get questions in my inbox about this, and that is how can you or how should you be marking up your charts, to trade, especially in binary options. So as you guys know, I am a binary options trader. I've been trading binary options since 2019. All right, and the way that I mark up, the way that I do my support and resistance, I got a video on YouTube that it's literally a short. Right, it's like 30 seconds or something like that, 30-40 seconds, about trading, about support and resistance video, like simplified. And what's so crazy is that video alone has done so many views. Let me see if I can find it really quick. I think it's like over 100,000 views on a freaking YouTube short of how to simplify support and resistance. And when I seen that, I've always kind of known, obviously, that it's always been up in the air. People always ask, like, how do you do a support and resistance thing and stuff like that. But when I see how fast and how much that video took off, it really opened up my eyes to realize and understand that you guys just really don't understand how to do support resistance, right? And understanding the markets. And if that's you guys, understand this. I'm trying to talk and find the video at the same time. But I was the same exact way, right? And I'm sure we all started the same way. When we first got in, a lot of us probably didn't know how to trade support resistance, right? We weren't very familiar with it. We didn't know how to, how to mark up. We didn't know if there was too many lines on the chart, or whatever the case may be. Why can I not find this? Oh, here we go. Look, I'm gonna play. I gotta play it before we do this. This live here. I gotta play the video. And you guys let me know if you've watched this one right here. All right, so let me know in the chat. Drop some sevens in the chat if you guys have watched this one.
Market. One thing to note is each one of these little candlesticks or bars, whatever you want to call it, is
right. So I made that video, as you guys can see. I got way more hair on my head. But I made that video a while ago, probably I think in like 2021, if I'm not mistaken, at the very beginning of 2021. Still kind of during that 2020 era, kind of sort of, right? But I made that video for TikTok, and it kind of did blow up. It got some traction on TikTok, but it got even more traction on YouTube. And what's crazy is that I've done so many videos on YouTube. I've never actually done a video that is solely pertaining to how I mark up my charts, how I do support and resistance, and really kind of diving deep with that. So I'm going to do a full live stream for you guys here today. We're going to go over a few things, what it is that I look at, and I want to break it down for especially the newest trader around here. I know there's so many traders that come in with all different types of experience, but I believe, like, the way that I teach, we can start from the very, very beginner basics, and we can move up, and up. And every single step of the way, you're going to learn something new. I almost guarantee it, right? So let's go ahead. We're going to jump into the charts. Before we do that, man, how many of you guys are excited about that? All right? How many of y'all are excited to get this knowledge tonight? All right? Let's get it. So, guys, look, I always want to start with this. I always start with this so that you guys can really understand. Because to understand support and resistance, you got to understand the markets, right? You got to understand how the charts move. You got to understand everything about not necessarily the strategy, but just understanding how the markets move in general. And once you can really get like a fine tune of that, like a nice grasp of that, things become so much simpler for you. Okay. So what I always tell people is that when you are trading in the markets, okay, this is the first thing you want to know and understand, is that the markets only move in three directions. All right. The markets only move in three directions. Who here can tell me in the chat, in the live chat, what are the three directions? All right, while you guys are typing that, I'm sure it's probably a delay, right? So I'll go ahead and put it up here for you guys, right? So actually, I'll do this. We're going to do it just like we do a session. So the markets only go, right, up, down, and occasionally sideways. You guys see that? Market's only going 3 directions. They go up, boom, they go down, and occasionally you're going to see them go sideways or to the right, all right, from the left to the right. All right, up, down, and sideways. That is how the markets move. Now, this is it's so crazy because when we think about trading and getting into it, a lot of people tend to overcomplicate such simple things, right? So the markets only move 3 directions, up, down, and sideways. The faster we can realize this and understand this, it can help us a little bit understand a little bit more about how it is or what it is that we should be looking at in the market when it comes to us looking for potential entry points, right? Now, within this up, down, and sideways movements, guys, there are going to be what we call patterns. There are multiple different patterns that reside in the markets that you can learn, literally thousands upon thousands of different patterns. And I wouldn't really say any one pattern is better than the other. It's really just about how it is that you trade it. But my point is that, there's so many different patterns. All you have to do is learn a few of them. So if you can get that the market's only moving 3 directions, right? We narrowed it down, 3 directions, and in those 3 directions, there are different patterns that you can learn to make your trading better. You are already off to a good start. Now, which patterns you start with is completely up to you. Some people like to start with, right, the simpler ones like the M's and the W's, or double tops, okay, and double bottoms. All right, so those are some simpler ones. How many of you guys here are familiar with M's and W's? I'll give you some quick examples of how that looks. All right, so when the market comes to a top point, like here, for example, boom, comes down, boom, goes back up, and starts to form that M. All right, so when you see the M start to form, what is it a good idea to start doing? You're going to start looking for entries on the sell. All right, now how do you trade an M? It's very simple, okay? You're going to trade an M. Once you see this form, you're going to wait for the market to come back down to this neckline right here. So that middle part of the M. So we'll go ahead and do this for y'all. Right there. Boom. And once you break past that, that is going to be your sell position. As you guys can see, did that happen right here on this M? And by the way, then you go ahead and you complete the M and you write it down to the bottom. Boom. So did we get a nice sell right there on the M? All right. And that was just one quick example. That's just one quick example. And there's different variations of the M. Here's a W for you. Right? Very simple. And again, there's different variations. Boom. But it's still a W. All right. Boom. See that? Right? So very simple. I gave you guys two patterns examples, and literally both of them are right here on the screen, right here in front of us. Not only are they here on the screen in front of us, but they both played out to do exactly what we thought they were going to do. Literally right here in front of us. Right? So bottom of the market, you got the double bottom at the W. Boom, 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 boom. Buy, shoosh. Goes up. Double top at the top, right? The M pattern, boom, 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 boom. Sell, and boom, it goes down. All right? Now, the reason why I wanted to show you guys that is so that you can start understanding. For all my people that say, trading is gambling, trading is risky, trading is this, trading is that. So that you can start understanding that there really is a method to the madness, right? This isn't just randomness that we're doing here on this chart. These patterns happen again and again and again and again and again. And if you can get good at finding these patterns, you can make a lot of money in the market. Does that make sense to everybody here? Right? If you can just get good at identifying the patterns, you can make a lot of money in the market. You can be, it doesn't matter if you're 16, it doesn't matter if you're 65, right? This is something everyone can do. My son started trading when he was 3. He started identifying candlestick patterns when he was 3. He has a demo account on his iPad since he was 4. That's when he got his iPad, right? Got a demo account on his iPad, and still to this day, he opens up that account every once in a while, and he trades. And I told him, now he's 6 years old, right? I told him, when you start making good money on your demo account, I'll put some real money in there for you, and you can grow that and do whatever it is that you want to do with that money, right? So this is very simple stuff is my point, guys. Just start learning to identify these patterns, all right? Now, all right, boom. So let me get rid of all this really quickly. We're going to start from the top. All right. So we learned 2 things so far. Number one, stay with me. The market's moving 3 directions, up, down, and sideways. Number 2, within these up, down, and sideways movements, you are going to find different patterns that you can learn to pretty much give you an idea of what the market is going to be doing next. All right. Now, number 3, before we get into actually marking up support resistance, is understanding this. When you're trading, okay, I'm just going to stick to scalping and binary options. So we'll say that when you're trading binary options or when you're scalping short positions in the market, there are only 2 types of markets that you're typically going to want to trade. Okay? Write this down. Number 1, you have the trending market. Oops. I put trending. And you have the ranging market. All right? The trending market and the ranging market. Okay? So the trending market is going to be when you're trading in the direction of the market. So you're trading the trend. If there's one thing that I can teach you guys, I say it all the time, the trend is your friend until it bends. So you go ahead, you can take that trend line and get multiple entry points. All right? Trading the trend. All right? Boom. So we have entry, 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 entry. And typically, as you're trading the trend, what you want to be doing is, for example, when the markets are moving up, you want to be identifying what's called higher lows, right? So these higher lows, all right, are typically going to be your entries when you get the higher lows, and then you also get, obviously, the confirmations that you look for to enter those trades as well. So if we get rid of this, even if I get rid of all this stuff here, right, you're still seeing, just off of that trend, right, some solid entry points just off of this alone. Just following the markets going up. Boom, 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 boom. Okay? Now that's trading the trend. What I'm going to show you guys today is how to get good at trading the range and get those nice, or even counter trend trading, but get those nice entry points on support and resistance, trading the reversals, quick reversals, in binary options, because quick reversals is definitely where it's at, right? Quick reversals is definitely where it is at, all right? So when you're trading the range, what a range is just sideways movements in the market, like this. Okay, it's when price is consistently bouncing within the same price range. All right. Now, depending on your style of trading, most people, or I would say probably most traders, do not like to trade the range. Okay, they don't like trading sideways movement. They don't like trading consolidation, so on and so forth. But when you're trading binary options, remember we went over on yesterday's session, we talked about this. When you're trading binary options, we don't have to be a large amount of pips in profit for us to make money. We just have to be a couple points in profit. So we can actually make a lot of money trading the range and trading these quick reversals. Okay? Trading the quick reversals. All right? Now let's talk about it. I want to show you guys how it is that I mark up my support and resistance, because it's actually very easy. It's very simple. What I do is I look for what we call reaction points in the market. All right? And I do all of my markups and I do all of my analysis literally as I am trading. So at that very moment, okay? So I'm going to walk you step by step through how it is that I trade and how it is that I do my markups. Before we do that, I need everyone to do me one favor. One favor. You guys ready? If you haven't done so already, drop a like on the video. All All right. I know you guys are probably focusing. You're paying attention. Drop a quick like on the video for your boy. All right. Let's get them likes up. Let's get them likes up. We had I think about 40, 50 people already flow through the stream. We got 6 likes on it. So go ahead. Let's drop some likes. All right. Let's get some more people to this information. Because I'll be honest with you, I give out a lot of good information on YouTube. I just don't feel like enough people see it. You know what I'm saying? I don't feel like enough people see it. I don't think a lot of people actually teach this kind of stuff on YouTube. I could be wrong, right? But I don't think a lot of people get on these live streams and do stuff like this or make the videos and just talk about education, not the lifestyle and the cool stuff and how much money I made, right? So let's get them likes up, all right? Appreciate it. All right, cool. So as I'm trading, you guys know, let me just put my, all my indicators, back on the screen for you. All right, so we can look at literally what it is that I'm doing, right? So let's do this. So this session started at about 9:30 p.m. EST. So that's about right here. Right before this session, this market was dropping right here. So what I'll do is I'll go ahead and I'll do a quick market replay, okay? And we'll push forward a little bit. Boom. All right. So, how many of you here trade the 3-step setup and know about it? Drop a 7 in the chat for me real quick if you guys are familiar with the 3-step setup. Okay, drop a 7 real quick. All right. Now, remember, I'm not doing these live streams for myself, so I would love some participation. I want to see what you guys are learning. All right, that is making sense, right? Yes, this is TradingView. I do all my markups on TradingView. I never do my markups on the binary platform. All right. So I do all my markups on TradingView. So check it out. So 3-step setup is very simple. I look for 3 indicator-based confirmations. I want to see overbought or oversold on all of them. If you guys haven't, or if you're not familiar with the 3-step setup, you can probably find one of. I've probably gone over it on a few YouTube videos. I'll put a card somewhere on the screen if you're watching the replay, so you guys can go watch that. All right. But the 3-step setup is very simple. So 3 indicator-based confirmations. We got Bollinger Bands, we got Stochastic, and we got DMI, okay? What we want to see in this situation right now is being that all 3 indicators are showing an overbought market, okay? And overbought essentially means too many people are buying it, all right? Too many people are buying it. What goes up must eventually come down. Does that make sense to everyone here? All right? Okay. So being that too many people are buying right now, we should be looking for sells in the market. We got 3 confirmations for overbought. We are looking for sells. Now, as you guys can see, beautifully, the stochastic is starting to push down a little bit, right? So let's just bump forward a little bit. See what happened. Okay, boom. So now we see the stochastic is actually crossing. You guys know I love the stochastic cross as an entry. Obviously, there are some other factors you might want to look into. Multiple time frames, see what the 3 minute is doing, see what the 1 minute is doing, right? Multiple factors into that. But stochastic is crossing. The DMI is starting to come down as well. And if we're looking at the market, we got this crazy doji-like bearish candle, right? So here's what I would do. My question would be at this moment, and I always go with my confirmations first. So I do confirmations first, and then I do my markups. I know every trader is different. I'm not going to sit here and say that I do it the best, but I can tell you I probably do it the most simplest, and the simplicity makes it also super effective, right? Makes it super effective. So here's how we look at it, okay? Once we get to this point, and I got 3 confirmations telling me that the market is potentially coming down. Remember, what I always tell you guys is when you're trading binary options, you want to be able to separate your confirmations from your entry points. Right? Confirmations from entries, okay? So when we're looking for these confirmations and entries, we got our 3 confirmations. We're waiting for the entry. But another solid confirmation that I always like to get, and I don't trade, for the most part, I usually don't trade unless I get it, is some kind of market structure, some kind of support, some kind of resistance, some kind of retest or a break, so on and so forth. So what I would do is, right now, being that we got confirmations for the sell, I'm going to look to the left-hand side of the screen. That's what I always want to do. You want to look to the left to be able to tell or determine what's going to happen on the right. So you got to look to the left to be able to determine what's going to happen on the right. Now, with TradingView is beautiful because what they do is when you move your little mouse, it creates a crosshair. I don't know if you guys can see that. but there's a crosshair on the screen. So what I do is I'm going to take my horizontal line and I'm going to just look at where the markets currently are. Got these big wicks right here. So I'll probably end up I'll put my line right in the middle of these big wicks, right? Boom. Something like that. All right? So this is what I'm going to do. Once I have this there, my next question is, did we get multiple reactions at this price point in the past? Okay? This is what I always ask myself. Did we get multiple reactions at this price point in the past? So if I'm trading and it looks like this, then what I want to do is, I want to zoom out a little bit and see all the different reactions. And not only did we get the reactions, but were they strong reactions? Okay? Were they strong reactions? Now, real quick, how many of you guys here struggle with marking up support and resistance or identifying support and resistance? Okay? How many of y'all here struggle with putting support and resistance on your screen, but then at the end, you probably got like 50 different lines on your screen, and you don't know which one is the right one? Right? Keep it real. Keep it real. Drop some LOLs in the chat if you guys have ever experienced that. Right? When I first started trading, this is how my charts looked. Every reversal was a support and resistance for me. This is how my chart looked. And it literally stressed me out. Because I could not tell if the market... I'm like, yo, which one of these lines do I choose? This is crazy. They told me to put the top and the bottom of the market. There's so many tops and so many bottoms. How do you know which one to choose? Right? Then I'm like, okay, I got too many lines now. Right? So I went from having all that. I said, I got too many lines now. So maybe I'm just reading this wrong. Maybe they really meant just the top and then just the bottom. And then I look like this and I'm like, yo, I'm never going to get any trades like this. Like the market's not even over here. Right? So it's like you can't win. I'm like, what's going on? So then me being me, because I'm such a simple person, okay? I always say I'm not the sharpest tool in the shed, but you know what? I get it done, all right? So I always look at when I'm trading, I say, okay, let me just look to the left real quick. I'll put my line there. And then I ask myself, is this a good point? Well, look at all the reactions that we got. So what do we have here? We have the market comes up, wicks this price, big drop down. I don't know what happened here. Look at this. This price is about to go to another country. Look at that. Wait, that must have been news or something, right? Okay, cool. That was weird. Cool. So, crazy reaction here. Let me change this to white because this yellow is killing me. All right. Look a little bit further to the left. Another reaction here. Boom. Reaction. Look at this. Another reaction here. Boom. Reaction. Look at this. Huge wick. All the way. Nah, we got to see how many pips that is. This looks crazy. This looks crazy. A 16 pip wick. All the way to that same price. And then what it do? Drop. How many pips? 45 pips. 45 pips in just about an hour. Multiple reaction points. We can keep going back. Right? We can keep going back. Reactions. Okay? We keep going back. So when I'm talking about reactions, here's what I want you guys to understand. Because this is a reaction too. Okay? When I'm talking about reactions, what I'm looking for is two things, okay? Either a break or bounce. This is what I'm looking for in reactions. I'm looking for either a break or a bounce. Okay? And if I can get one of the two, whether it be a break or a bounce, all right, in the past, and it shows me that this is a good potential price where we're getting multiple reactions at this price area, okay, and we're getting big moves out of these reactions, then I say this with my strategy, not by itself, this with my strategy confirmations could potentially be a good trade to enter. Does that make sense to everyone here? And now I got a potential resistance or reaction point. Now the beautiful part is I just gave you an example of what just happened, like 10 minutes ago, 20 minutes ago, right? But imagine if you would have caught this reaction point, maybe like all the way back here, right? You caught it back here, yeah? And you kept this line on your screen, okay? You kept the line on your screen, and you fast forward like 2 weeks later, or a week later, whatever this is, I don't know. Fast forward a week later, and you slowly start to see price, right? You slowly start to see price come back to that line, right? You start to see, let me put my glasses on. All right. So you start to see price come back to the line that you drew up. What is this? This was 24th. This was 23rd. So actually it was the next day. That's even better, the next day. So this is Tuesday the 23rd. This is Wednesday the 24th. So this is the next day. So you got back on the charts tomorrow, and you used the same exact line that you left on the screen from yesterday. Okay? Markets start to come back to that line. Okay? And what happens? Drops. You keep that same line there. Look what happens. Same day. Market shot up, wicks it, and what happens? Drops. Right? We keep going. You keep that line there. Keep the line there. You've already noticed, you've identified from even these trades over here, you identified that this is a good area, right, for potential reversal. So what happens? Comes back to the line, and what happens? Right? Drops. Again, right? And we could keep going and going and going, right? I'm sure you guys get it by now, right? All I look for is reaction points. So as I'm trading and I'm looking at a potential area to enter. Now, here's another thing to understand and remember, because I know as a new trader, a lot of people beat themselves up with not getting the exact price right. What you have to understand is that support and resistance is not a price. It's an area. Okay, it's an area of support. It's an area of resistance, or known as zones. So what happens is that sometimes as new traders, right? Sometimes as new traders, you'll come in and maybe you'll have a resistance line here. Right? Let's get rid of this. You'll put a resistance here, and then the market comes up to here. Come on now. And you're wondering what you did wrong. Oh, it broke my price. It wasn't correct. What did I do wrong? So on and so forth. You didn't do anything wrong. What you have to remember is it's not an exact price. It's a range. Right? It's an area. It's a zone. So now I know as the markets come up into this zone, this is my potential sell zone. Does that make sense to everyone here? Potential sell zone. As the market comes up to the zone, potential sell zone. As the market comes up to the zone, potential sell zone. So on and so forth, right? See if we can get any more examples here, right? Let's do some buy examples on the bottom. Okay? Buy examples on the bottom. Very simple. Okay, so we're looking at this market here. Market comes down, boom. Creates a low, comes back up. What do y'all think it's going to come down to? Let's do this. All right, so it creates that new low after breaking. It was a breakout. So we got the breakout over here. Comes down, creates the low. Let's keep moving forward. All right. Boom. Hit the same low. So now we got a reaction. What are we going to do now? I just won that trade, right? Boom. We're going to keep the price. We're going to keep our line there. And we're going to wait. If you trade the 3-step setup, I always tell you, you're going to wait for your setup confirmations. So you got your stochastic cross. Everything's looking good. You go ahead and enter, right? And you are good to go. You got 1, 2, 5, 10, 15 minute on that expiration, right? I'm usually only in for like one candlestick. I know some people do, you know, the 3-candle rule and stuff like that. It depends on the setup, to be honest. Right? And these are just random examples. I didn't look at any of this beforehand. I'm just showing you guys as I go, right? This is how I do it. All right? Mark it up. This is my support. Okay? And again, lining up the crosses. All right. And as you're doing this, obviously as you're doing this, this is what you want to do as well. So as it comes, it creates the low. What's this also going to create? The high. And then it creates the low. And then it creates the high. Right? So I'm just giving you one by one examples. But as it creates this high, what are you going to want to do? You're going to want to make your resistance as well. Right? So make that resistance zone. So now you know if the market comes up here. If the market comes up to this zone, what are you doing? Just doing it as you trade, right? The market comes up to here. What are you doing? Drop it in the chat. And I'll go ahead. And you could do like from body to wick or from wicks to bodies, right? I always just do like an average of like the wicks and the bodies. So yeah, if it comes up to here, you're selling, right? Go short, right? Sell it up. If it comes down to here, what are you doing? You're buying, right? So at the top you sell, at the bottom you buy. Now remember, you're not just blindly doing this. You want to get your confirmations as well. You want to get those confirmations in. You want to make sure the strategy lines up. You want to make sure that the market that you're trading actually makes sense. This is kind of, I wouldn't even be trading this market. I'm just showing you guys for an example. But I wouldn't be trading this market because there's so much wickage, right? There's so much wicks in here. It's very choppy. And we know with binaries, these wicks, I mean, these wicks are huge in the market, right? If you look at this wick right here, this wick is almost 3 pips. That's 30 points in the market. All right? So again, I wouldn't personally be trading this. I'm just showing you guys examples of how simple it is to identify these reaction points and be able to plot your support and resistance as you trade, right? You don't have to go, you know, start on Monday and plot up support and resistance on Monday and Tuesday and so on and so forth, and you know, look for the 1 hour and the 4 hour and the daily. Trust me, I understand the higher the time frame you go up, the more accurate the analysis is going to be. But I'm just telling you guys how I do it and how I do it trading binaries. If you're not trading binaries, then maybe this is not for you, right? But we know when we're trading binary options, it's very in and out. It's very fast-paced style of trading. So when we're trading, it only makes sense that how we trade it, all right, if the style of trading is fast-paced, right, in and out, how we trade it should be fast-paced in and out as well, right? So very simple. As I'm trading, I just look at the reaction points. I keep those reaction points there, and I trade them again and again and again and again and again, right? Boom. Look at that. Hits that, wicks it in, comes on down. So AkashX just crossed. Let's see if it drops. Yes, it does. Look at that. Boom. Drops again. Look, comes up and does it again. Did it cross yet? It didn't cross yet, so we wouldn't be getting in. Now it crossed, and there you go. All right. That one would have been a sketchy one. That would have been close. Depending on how long you were in that trade, that would have been a close one. All right, but you can't win them all, right? You can't win them all. And it's also not about winning them all. It's about just getting that consistency in there and consistently winning. That would have been a nice clear right there. comes down to support, stochastic cross, DMI, buy signal. Good to go. There's another good one right here. Comes back down to support, stochastic cross, DMI, buy signal. There you go. All right. And we're just going to stop there. I'm sure you guys get it by now, right? Let's go ahead and mark up all of the ones that lined up with support and resistance that we just plotted. And all the ones that have the confirmations for the 3-step setup as well. And let's see how many we could have or should have cleared. All right. No, that's not there yet. All right. Here's one. So we got one, Bollinger Bands and resistance. Overbought, cross down, overbought, sell signal. Boom. All right. We got no confirmations on that one. We got no confirmations on that one. This was a solid one. So we got the stochastic cross, DMI buy signal. We're at the bottom Bollinger Band, and we're at support. All right. Here's another good one. Boom. All right. Same thing. Support, stochastic cross up, DMI buy signal. Good to go. Look at this. I'm going to show you guys something real quick. 1, 2, 3, 4, 5. 5 out of 5 trades would have won. 5 out of 5 trades, if you were using the strategy that I teach and really going for the confirmations, not just like this one, for example. This is a close one, but this doesn't confirm the stochastics. Some people would have taken that because you're impatient, but that doesn't confirm the stochastics, right? So I wouldn't have taken that. Okay. This was another one where I said this is a close one, right? Actually, I think it was back here somewhere. Did this cross? Yeah. So you know what? 5 out of 6 trades, because I think this would have definitely been a loss. Look at that. All right, so I'm put red on this one. So 5 out of 6 trades. I mean, that's some pretty good accuracy right there. 5 out of 6 trades that you were taking, if you would have followed the strategy that I teach, and you would have traded the way that I trade when I talk about support and resistance. It's very simple. I do not complicate support and resistance. I try not to overcomplicate it. All I'm doing is I'm looking, as I'm trading, I'm looking for potential points of entry. And those potential points of entry, I have to look to the left-hand side of the screen to see if there are any reaction points where the market reacted at the same price point or near where the markets currently are. A lot of the times when I'm trading, there might be a time where there is a reaction, but the market hasn't gotten to that reaction point yet. So I'll give you an example. Okay, let's say, all right, let's say I got my confirmations like this. All right, it's coming down, and that's, this is starting to come down as well. And my markets are here. But it didn't yet come, and I noticed and I identified that this is a reaction point, price point right here from these over here, right? So at this point, if the market is here and I'm seeing everything starting to cross down, I wouldn't take that trade yet. Some people would. Some people, will get excited and they'll click the sell button real quick, right? But this is how you get, right, spiked out. Boom. Comes back up. Market continues to go up. Boom. And then it finally comes down. How many of you guys here have ever been in a trade before where everything was set up, everything looked good, right? Everything looked great. And then you go ahead and you enter the trade. You're kind of hesitant, but you enter the trade because it lined up. You thought it was going to go one way, and it completely went the other way. Out of nowhere, shot the opposite way, and then as soon as you lost, it went in the direction that you were looking to trade. How many of y'all have ever experienced that before? A lot of the times, this could be the reason why. Right here. Your confirmations are lining up, but you're close to a potential reaction point. So the markets are always going to pull the price to that reaction point before it makes the move. And a lot of the times, it could be in the form of a wick, too. You can get a big wick straight to the reaction point, and then it drops down. Right? Whew. So yeah, I mean, very simple concept. I know I kind of just flowed through it real quick, but hopefully it made sense to everybody here. What we're gonna do right now is I'm gonna open it up. We've been on for almost an hour, so I'm gonna open it up right now. To any questions? I know there was probably a few questions in the beginning that I probably missed because I was teaching, right? But if you guys have any questions whatsoever, now's the time to go ahead and ask those questions. Ask them now or forever hold your peace, because this is literally probably the most requested video I've ever had on my channel. All right, and we're finally getting it done. So I want to see what kind of questions do you guys have, if any. Or if I did a great job of just explaining all of this, and that's why you don't have questions, let me know in the chat as well. And again, guys, hey, let's get those likes up. If you haven't liked the video already, just do me a favor. It takes less than 2 seconds to just go ahead and like the video. I highly appreciate it. All right, highly appreciate it. All right. So expiration time. So my expiration time, it varies. It varies. So I always tell people, you can't be too black and white with the markets. I know everybody wants an exact time. Like you want me to say, I always, no matter what, trade 5 minutes. I don't. All right. So it very much does vary. I gave a somewhat of an explanation on that yesterday when I was talking about how primarily I look at the 5 minute. 5 minute is my baby. I look at the 5 minute chart. That's where I do my markups. That's where I do my analysis. What I then do is I scale in to the 3 minute. I always look at the 3 minute for a potential early entry. And then I also want to see the 3 minute and the 1 minute. All right, a lot of the times, not all the time, but the most of the time, I want to see the 3 minute and the 1 minute lining up to tell me the same thing. Now, the reason why I say my expiration isn't always the same is because sometimes, right? And again, it depends on the market too. But let's see. See if I can get some examples here. All right. So sometimes if you have like, let's say, if I'm seeing like a lot of wicks like this, for example, and I don't really trade wicky areas, but if I see a lot of wicks, but I have a feeling that it's going to reverse, I'm going to go into the trade a little bit longer because I want to give the markets time to move and not wick me out. So not get caught in those spikes that a lot of people get caught in, whereas you're in profit, then it shoots up, takes you out, you lose the trade, and then it goes back down to where you thought it was going to go. I want to avoid that. So whenever I have a feeling in the market that, hey, maybe I should enter the trade for a little bit more, I'll probably do a 5 to maybe like 5 to 7 or 9 minute trade, somewhere around there. All right. I don't really go too much past 10 minutes, to be honest, unless I hit rollover. And I don't hit rollover very often. I know it's a feature. If you guys don't know what rollover is, but it's a feature on a lot of binary options brokers that allows you to extend your time. So you're paying to extend your time, right? So I usually do somewhere between that. You know, if I need more time, somewhere between about 5 to 9 minutes, right? Depending on how much time I need. So I give the market time to move. Typically, I like trading 3 minute positions. So I like to get in really quick, in and out. I like to get some sniper entries, try to get the best possible entry that I can get. And I know if I get the best entry, I can clear it in 3 minutes. And 3 minutes is going to go my way anyway. And boom, I'm good to go. So I like doing 3 minute trades. But I would say it's a nice balance between 3 minute and 5 minute trades. All right? Depending on the setup, depending on the market, depending on how much the market is moving. That's typically how I do it. So 3 to 5 minutes. Hopefully that answers your question. All right? How much should you risk in every trade? How much should you risk is very simple. Number one, not too much. But the way that I like to calculate it in my head, I do this for both leverage style trading and I do this for binary options, is in my head, what position size can I take where I can lose 20 trades in a row before I blow my account? That's just how I do it. All right? So 20 trades. Now, I don't even think when I sucked at trading, have I ever lost 20 trades in a row. But that's just how I calculate. I feel like 10 is too short. Especially like if you roll over, because if you roll over, that's double the loss, right? So 10 is too short. 15 is like in the middle for me. I like to do 20. So I'll look at my account size. I'll break it down to 20 trades of losing, and I'll see what that position is. All right? Hopefully that makes sense. But that's how I do it. Now also, when it comes to risk, and we're talking about your account size, you never want to put what you can't afford to lose in your account. Because if you put what you can't afford to lose in your account, you're always going to be trading off of emotions because you don't want to lose that money, right? So you have to have a decent sized account and be willing to lose at least 20 trades in a row. I'm not saying, because I know there's always comments like, why would you want to lose 20 trades in a row? I'm not saying you're going to lose 20 trades in a row. I'm just saying risk factor. In the back of my mind, I break it down into 20 trades and keep it as if I were to lose 20 trades in a row, it would take 20 trades in a row for me to blow my account. All right? Boom, boom, boom. So I just went over expiration time. What's a pip? A pip is a percentage in point. All right? Percentage in point. So yeah, I have a whole video too. If you go on my channel, I have a video on pips and how to calculate pips and what pips are. All right? Order flow? Yes. Yeah, I use order flow. I got a nice little order flow tool. Let me see. Show you guys real quick. I pay like, I think, I don't know, I think like $600 a year for this. I really don't use it often, to be. I used to use it all the time. But I don't use this too often anymore, to be honest. But I still pay every year for it. Just in case, right? It's better to have it and not need it than to need it and not have it. If you guys have ever seen this on my screen before, it's an order flow tool. To answer your question for the person that asked that. So it pretty much puts audio to order flow, and it shows you where buys and sells are taking place in the market right now, real time. All right, so it's a pretty cool tool. It makes noises and stuff like that. They have all the Forex pairs you can add. They have all the cryptos, like, well, the main cryptos, not all the cryptos. They got futures, stocks, ETFs, ECNs. All right. Intervals. I don't know what intervals is, to be honest with you. And then these are the active ones. These are the ones that I turned on. And again, it shows you order flow. So it'll show you, and you can change the sensitivity too. I have them on medium. I think all of them are medium. So if there's a medium sensitivity amount of orders flowing in a specific direction, it's going to make noise and it's going to let me know. So like right now, GBP USD.